discussed a lot of different financial models. We've talked about VC, private equity, corporate venture funding, and now we're going all the way through to the funds of funds. So it's all about asset owners' approach to sustainability and climate investment. And this is probably one of the most important parts of the financial model in climate tech, because it's the flowing down of funding the funds who actually make the biggest impact. So with me to host this discussion is Nick Firzli, the Director General of the World Pension Council. So Nick, I will hand it straight over to you.
Merci. And I don't need to put that, right? I don't need to wear that.
Yeah, we just.
Do I need to wear the helmet?
As long as you can hear.
Okay.
You've got a mic. Maybe pass this to you.
Okay. Okay, hi everyone. I'm delighted to join you here today for the Asset Owners session. And Olivier just arrived in the nick of time, so we can start. So this session is about asset owners, which is another way of saying pension funds, sovereign wealth funds, foundations, endowments, insurance companies, and several banks. So the guy who actually own the assets as opposed to the banks and the investment management companies. I'm going to spend the first few seconds to tell my neighbors and co-panelists to introduce themselves. So we'll start on the left with Olivier. Olivier Wenden of the Prince Albert of Monaco Foundation.
Yes, thank you very much. Good afternoon, everyone. Olivier Wenden, CEO of the Prince of Monaco Foundation, an NGO created 18 years ago. We are pretty unique on the market because our chairman is a running head of state, which means we do operate projects on the ground like a traditional philanthropy, but we do also a lot of green and blue diplomacy around the world to move the regulation and international policies. We support science, but we're also shifting towards impact investment, and I guess that's the reason why I'm sitting here with you today.
Great, Valerie?
Good afternoon, everyone. I'm Valerie Easmon-George. I'm a pension board member with London Borough of Islington Pension Board and pensions committee member. I've been in the pensions industry since Lord Miners came up with the idea that owners of capital must have a say in how the capital is invested. So that's when I became involved. And I'm also currently a civil servant, a member of Public Communication Service Union. Thank you.
I'm Nick Firzli. I'm the Director General of the World Pensions Council, which is an international association of asset owners, pension funds, sovereign funds, and endowments. And I'm also an advisory board member to the World Bank, focusing on mobilizing private capital towards emerging market green infrastructure assets. To my right is Chris Smith.
Good afternoon, everyone. I'm Chris Smith. I'm the branch secretary of Westminster Unison. Unison is the biggest union in the country. I'm also the chair of the pensions board of Westminster City Council, and I've been involved in pensions not all the time, but since 1975, when there was some fantastic weather. For the first time, I saw climate change happening then, and I realised that something was happening. We needed to make it not happen in the same way. So thank you. And I also work very closely with Nick, with the World Pensions Council and other bodies.
Tony?
Thank you. Hi, I'm Tony Burdon. I'm the CEO of a campaign called Make My Money Matter. We engage ordinary people, but also businesses, NGOs, and other employers with their pensions and their bank, and try and get those financial institutions to invest sustainably in a way that doesn't drive the climate crisis, but actually tackles it.
Great, and before we move to the chain of governance, so if there's one idea I wanted you guys to keep in mind today, is the notion of that there's a chain of governance which is made of multiple parts, and the way they interact will to a large extent determine, in our opinion, the future of ESG. But before we move to that, I'm going to ask every one of you, starting with Tony perhaps, transition, the great transition, the ultimate transition, the energy transition, climate zero, net zero. How do you personally steer capital towards that goal?
So I think for me there's two things. Firstly is about doing no harm. So in the UK we've got £3 trillion invested in pensions. So that's money that, you know, I think all of you will have a private pension. So doing no harm means thinking about emissions from the pension scheme, thinking about the companies you're investing in, and thinking long term about whether you can pay pensions in the future. So what's interesting about pensions is that they have to pay people in 20 years' time, 30 years' time, 40 years' time, and 50 years' time. So that means they've got to look ahead to the kind of returns they're going to get and the kind of life that someone will retire into at that time. So that means climate risks are huge and have a massive impact on those investments. What we have at the moment is a situation where all our pension funds are invested in oil and gas companies, all of whom are planning to expand production, not reduce it. So the International Energy Agency has said there can't be any more expansion of oil and gas. There is enough exploited, developed now. We need to start reducing. But all our pensions, ironically, are investing in those very same companies that will actually harm future financial return and harm the future retirement of people in that pension. Secondly, if you think of nature, so we did some work with an organisation called Systemic, and we mapped out deforestation risk in UK pensions. So there's something like 300 billion of finance invested in companies that are at high risk of causing and driving deforestation. So the science tells us that the Amazon, for instance, will be at a tipping point of moving from rainforest to open woodland in 2030. So when we think about doing no harm, we need to start making very radical, powerful decisions right now in our pensions to eliminate deforestation risk, but also to tackle those high emissions businesses that are not serious about transitioning. And asset owners, pension funds, have enormous power here. Like you were saying about owners of capital, you know, we're all owners of that capital, of those shares. But stewardship by pension funds is very soft and is not really driving that change in oil and gas companies, nor in companies that are driving deforestation. So that's one big area, do no harm.
And from England to the shores of the Mediterranean, and I'm thinking of Olivier here, and I think you mentioned blue assets earlier, and I think people are focused on what happens on land, including, you know, oil production in the deserts of Arabia or Texas, but there's a lot of things happening under the sea, and I think that is it SDG
14.
14 or 15, yeah, 14. So that blue, that ocean economy or blue economy is important, and people are neglecting it, and I'm glad that you're here to speak about His Highness Prince Albert's Foundation, because you guys, alongside King Charles in England, who was Prince Charles back then, and the World Bank, you've been at the forefront of the blue economy, right?
Well, yeah, thanks for asking, but you see your hesitation. The problem is it's very common, and I guess in this room a lot of people would have made the same mistake and like, what is SDG? So SDGs are this little pin, and there is one dedicated to the ocean. No, it was the UN level back in 2015, only 2015, a couple of years ago. Initially, when they renegotiated these targets for 2030, the ocean was not even a topic. It's more than 70% of the planet, not a topic. If you want to fix the climate crisis, you must address the ocean crisis. And this is totally unknown. I guess you don't probably know that 90% of the heat that our human activity releases is absorbed by the ocean. 50% of the oxygen that is available for us to breathe comes from the ocean, and not even to mention fish, transportation that is borne sea. So crucial elements, and still yet no one really knows that. And when it comes to investment, I told that this morning, it's still seen as something that charities will have to deal with. It's a philanthropic topic, not a serious topic for investors. So that's where philanthropies like us play a role. We need to put that on an agenda. That's the SDG at the UN level. It's a real topic. Prince Albert also managed to put in the famous Paris Agreement for climate, the ocean in the preamble. It's a fantastic tool at our disposal. We need to say that. And last but not least, we have to make the general public, but also investors and the main stakeholders, and I'm glad that you're here today because you play a pivotal role. Bankers, insurance, reinsurance, and pension funds, if you want to steer the wheel in the right direction. I'll be a bit more pessimistic to come back to your introduction. Last year, so 2023, was the first time the world almost reached the 1.5 degrees Celsius, which was presented in the Paris Agreement as the maximum, the cap. And that's, to live in a world like that, we had to stop opening new oil and gas exploitations. And that hasn't been done either. So we are really far from getting near to a target that we had for 2030, and we are even further from carbon neutrality by 2050. So at the moment, it's a massive joke. It's a massive joke. The ESG on the table at our philanthropy level seems like a beautiful greenwashing program, but it's not efficient at all. And I will be super happy that you proved me wrong on that aspect during the panel, but I'm afraid it's a failure.
On that note of cautious optimism or optimistic pessimism, I just want to say here that there's no one here really on the round table representing Brazil or Mexico or Saudi Arabia, so I will play the devil's advocate, so to speak. But what I mean is that I agree with you guys, when it comes to oil and gas, but we have to put things into perspective. Right today, all of OPEC's oil exporting nations in Latin America, the Middle East, Africa, and Asia, all of them combined, they don't represent more than, I think, 11 or 12% of the carbon damage being done to the world. So it's true, we have to divest from oil and gas long term, but at the same time, I think Olivier mentioned diplomacy. We should not offend the people in Cairo, Mexico, and Riyadh. And there's an interesting example of real-world situation, which I was involved in. So 3 years ago, before the start of the Ukraine war, there were a bunch of European and British policymakers who went to Mozambique and Angola and lectured African governments about, the evilness of natural gas, deep offshore exploration, and if the Angolese and Mozambican people kept on doing it, they could face, fines or retaliation from the EU, blah, blah, blah. And all of a sudden, the Russians invaded the Donbas plains of eastern Ukraine, and the same prime ministers from Britain, Italy, and France, they rushed back to Mozambique and Angola, telling them, we beg you, you have to explore and exploit more deep offshore natural gas. We'll give you billions of pounds in subsidies. So these guys in Latin America and Africa and Asia, when they listen to us, they can be cynical, and so we have to be diplomatic. So of course we need them to embrace the SDG agenda fully, and some of them are doing it at varying speed, but I think we need to do it diplomatically. So that'd be my main message here. Back to that, chain of governance metaphor or image, which Chris and I and Valerie use, and Chris and I we co-chaired the main asset owners session in Paris during the COP21 summit, and we're cautiously optimistic, or we're a bit like Olivier back then, but I think we're quite happy with what happened since COP21, with all the problem, greenwashing, all the bad things. It's quite remarkable what happened in the past 6-7 years. More needs to be done, of course, and why do we like that chain of governance? Because it's a way to view the world. So, on the one hand, you have what gets the most media traction. So if you read the Financial Times, the Wall Street Journal, this is really what the media focus on mostly. It's day trading, what happens in financial markets, on Wall Street and the City of London almost every day, price fluctuations. And so that, in many ways, financial markets is driven by investment bankers and stockbrokers. That's one block. Then further down the chain, you have the asset managers, the investment management companies. And so these asset management companies are very often subsidiaries of big banking and insurance groups. And then if you move further down the chain, you have the real asset owners. Pension funds, sovereign funds, endowments, foundations, insurance companies, central banks. And then at the very end of the chain of ownership, you have Mr. Joe Public or Miss Jane Public. So that would be civil society. And people like Valerie and Chris, they are really at the crossroads of asset owners and civil society, because on the boards of these large pension funds, you have nurses, doctors, teachers, civil servants, municipal workers, and they elect or nominate board members. And so these guys, you could say that the board members of pension funds for like 50, 70, 80 years didn't flex their muscles enough. And what happened with COP and a little before COP, they started to flex their fiduciary muscles, as we say, and there's a chain reaction. So it's leading to many changes along that ESG chain. And perhaps we can start with Chris. Tell us more about it.
Okay, so I think what Nick is talking about is, I sit on the Westminster Pensions Board. We have about 2.5 billion under investment. But then you take local government pension schemes, and I'm a union rep, and so out of the local government pension scheme, with all the other union reps that sit on the boards or sit on the committees, we have over 350 billion under investment. Then if you take the rest of our union colleagues in the TUC, you've got something like 6.5 million people, and you're over $1 trillion just from that small cohort. And what do? We sit every month and listen to what our officers are saying, where we should be investing to get a return over the long term, 40 years, etc. But we challenge them. And we all have an investment strategy, and it's based on the United Nations Responsible Investment. So the key thing that we're looking at is ESG. And we challenge every single meeting. Will tell us if you're saying to invest in Aramco or HSBC, what is their strategy? What are they doing? And we will hold them to account before we say, yes, you can invest, no, you can't invest. And we're doing it. I'm doing it for my children and my children's children. I'm not doing it for me. And I think that everyone here should be looking at their children and their children's children. We have a voice. And for, as Nick was saying, going back to COP15, when the Paris Agreement happened, we talked to most of those people, and they would say, oh yeah, but that's not really important. What's important is the amount of money you get. Well, actually, when you look at ESG, particularly the governance part, what do you get? You get better returns every time. Westminster City Council's pension is 165% invested. So, and recently we were asked by our officers, okay, we're so well invested, why don't we put some money in safety, in bonds, etc.? But we challenged them. We said, well, actually, no, there are these other opportunities where we will be getting better returns, and we were right. So it is the owners of those pension funds, yourselves, me, electing the right people on the boards to ensure that governance is there. But it's also about the environment. We talked about ESG, but the environment is really important, because if you have a problem with where you've bought 1 billion trees, and those are not looked after, those are not responsibly treated, that money's worth nothing in the 20 years, in the 30 years, in the 40 years. It has to be done properly. And again, we are the people who should be doing that. So I'm going to leave a little bit for Valerie, because I don't want to take all your thunder. But our job as boards are to scrutinise every single time our asset managers, our advisors come and say, invest in this company. And we do not just do it on a whim. We have companies like Gaia Lens who have got software which is green software, and ensures that if we're looking at somebody, they've told us this story, are they greenwashing or not? Is it a great investment as well? What we don't want to end up is stranded assets. So if we put our money, and I'm told that lots of our money is in oil, etc., oil is going to be a stranded asset in 20 years' time or 30 years' time. So we have to be cautious. And I was taught to be cautious.
Yeah, and in finance, many of you are actually familiar with the notion of diversification, which is linked to what we call the efficient asset allocation. So if you are an individual investor, if you're a bank, if you're a pension fund, you want to allocate your assets efficiently, smartly, and the only way to do so is to diversify. So you can't have everything in UK gilts or French equity because you expose yourself to risk. If you have like a pot of different assets spread out across countries and industries, it's the only way for you to diminish risk and increase returns. Diversification. And in society we have diversity, and for many years we thought that the two were different, that diversification was something financial, economic, efficient, and diversity was something, you know, for boring, green, Marxist, whatever, radicals on campus. And actually, the two are one in many ways. Because if on the board of the asset management company, on the board of the pension fund, everyone is similar. Everyone is too white or too black, too brown or too yellow, everyone thinks the same. If they all went to the same school, if they're all, old Etonians or Oxbridge, they will see the world with similar eyes, and they will invest in a similar fashion. If they are diverse, if you have more women on board, they may see the world differently, and I think the fact that now Britain, in many ways, and the board of public pension funds in England, Wales, Scotland, have been at the forefront of diversity on boards, and the City of London and Valerie, for example, is a great example, where early adopters and early pushers for that, and having diversity on board can make a big difference, not only because people look like a Benetton advertising or a Rainbow Coalition, because the returns, the actual returns, are actually better.
Yes, diversity, as Nick has already said, is not only in the asset classes type, but also who's investing the pension, who's making the decision, who's scrutinizing, and who's putting money into the pension pot. As Chris has already said, it's not millions, it's not billions, it runs into trillions. An example, we take the Canadian Teachers Pension Fund. They've invested massively on infrastructure here in UK. But going back to the climate change, when we look at climate change, we have legal obligations in Westminster and Islington and all the pension boards. We have to firstly look at equality impact. Every investment we're making, we have to look at the impact, how we impacting on equality. What are the environmental implications? And we set targets to make sure we reach 50% of the future carbon exposure and take it forward to 75% to come to 2030. But looking at Islington, for instance, that's my role, to put pressure, to scrutinize, monitor, and also on the pension committee. 10% on infrastructure, which is the low carbon strategy, is very low, only 130 million. And we go down to the next two of them that we use, 100 million. So we need to be looking at this, because when you look at the population that's investing, people are now more aware. When we look at Kenya yesterday, we see the mass floods, the landslides. These are the things, if Africa, Asia, Pacific are not safe, we can't just be safe in the north, because pensions are a powerful tool to influence change, not only here in Europe, but in Africa, where we got deforestation, mining, the impact of mining, the water table is rising, there's flooding. So we can't just be safe, and we got trillions, not billions, and we're not using it to influence change. So these are the diversity, bringing those countries on board. They're with the youngest population and fastest growing economies. We can look at the land use and how we can introduce sustainable energy and into solar power and all the things that we can do and make an impact. So these are the things, we're still a way yet. I'm not where you are, but we're still a way yet, because when I look at the figures, it was, in fact, yesterday, these are really low. So we need to be doing more. We need to be moving away from just the bonds and the safe things. We need to be safe. The pensioners will be paid, but we can do more, and we can set higher targets, and more pressure can be put. And we're encouraging people who pay into pension pots to come to the meetings and put pressure. In Islington, in Hackney, they've got the diverse Hackney, and those they're putting pressure, so it's making an impact on what we're doing. Thank you.
Great. And back to Monaco, and people may have that cliched, perspective on Monaco. They think it's a hybrid between Singapore and Miami, and there's much more to that, of course. And one of the things, apart from Prince Albert and Prince Régnier before him, there's a very long tradition which stretches to the early 19th century, linking Monaco to Asia, Africa, and Latin America, because many of the princes 200 years ago, so long before globalizations, many of the princes didn't spend most of their year on their throne in Monaco. They were explorers, and they would spend literally 10 months a year exploring the Amazon River or sub-Saharan Africa, and there is a very strong tradition amongst the ruling family of Monaco to have that bond with the global south, which I think Prince Albert is really walking in the footsteps of his forefathers, right?
It is correct. I think Monaco, given the size of the country, and again, it's smaller than Hyde Park, smaller than Central Park, so that can give you an example of the size of our village. It's been always open to the world, mainly on the Med as well. We have 140 nationalities even in Monaco. So it's very cosmopolitan. There was always a will from the prince's family, but also the population, to cooperate with the world and to try to bring something back. That's the bottom line of the action of people in Monaco and of our foundation in particular. Why the Global South in particular? Well, when it comes to climate, or the climate and ocean and biodiversity nexus, because we have to address now the challenges the planet faces with these three crises at the same time. Everything is interconnected. The Global South is definitely suffering the most from the impact of climate change, and they're lacking a lot of, not necessarily and only financial support, but technology, human resources. So we need to accompany them. It would be absolutely selfish to just think, well, the North is not doing so bad, and okay, in the UK the weather is much better than it used to be, so let's be happy for that. And maybe just to a small parenthesis with what you just said before about the oil and gas, I was absolutely not mentioning that we should go to the Global South and say, don't open it. We, as Western world countries, we should lead by the example, because in France, Total is the first to say, well, the French government agrees on the Dubai agreement, but Total is still exploiting new sources of oil and gas. So it's really for us to start. The second thing is, so the Global South, why Monaco has a leading role to play? Well, to be honest with you, it's also because of the neutrality of the country. We never had any colonies, so it's easier to bring together these countries at the same table and address the topics. When Prince Albert talks about environment, we mean it. There's no secret agenda. We don't want to sell you weapons. We don't have a trade secret agenda in the back. So it really helps. We have a neutral voice, and it's luckily quite heard. But what we also bring to the table is really to think in terms of nexus in a holistic way. We've been blessed to be working with a lot of scientists in the 18 years we've been existing, but also to bring this science to policy, to put science into motion, and to support mainly, we started there, the SIDS, so the small island, that will be, some of them will be just disappearing. In 20 years, 30 years, they are wiped out of the map. So not only an island will disappear, a country, a culture. So they have already figured out, like the Palaos, they will be moving to New Zealand. But we know it, and we're not so shocked about it. That's our daily reality. We know the facts, we try to push it, but there's no reaction. So we know the world will be suffering with sea level rise. And when we say the world, oh yeah, it will be remote, it will be the global south. No, not at all. London will be condemned, Tokyo will be condemned even sooner, Shanghai is sinking as well, New York, Manhattan will lose 1/3 of the territory. And still, we're not reacting. The only reaction that I noticed 2 years ago is through insurance and reinsurance. These companies are starting to refuse insuring you if your house is too close to the coast, if your company is too close to the coast. That's a heavy, severe cost to pay. And I don't think our societies are ready to pay that cost. But that's where we're heading, because we don't want to see the wall coming. And we will hit it, and then we will react. That's usually how we move things. The only exceptional good news I noticed 6 months ago is when we were starting to really uncover the deep sea mining issue. 10 leading, mainly, I would say, well, British banks, but 10 leading banks announced in a charter that they will refuse to fund companies that will do deep sea mining. End of the story. If they don't fund these companies cannot grow, and the majority of them will just go bankrupt. So there is no activity if there is no funding. So that's another way, a powerful way to leverage the action. And pension funds, because you have the money, and it's similar to sovereign funds, so you have the power there. So definitely you have these strategic choices to be made when it comes to choosing the right investment.
Yes, indeed, and I think you mentioned that SDG 14, which is, oceans and rivers, it only came belatedly, 2015, right? And I was actually in New York when it was being drafted, so it was drafted slowly and painfully in 2012, 2013, and it's true that for the first time, people thought of, putting the focus, how much 1 out of 17 is the focus? Yes, debatable, because as you said, it's 80% of the world, and we're 75% of the world, and we're only giving them 1/17, and we think it's a victory. But before that, we had the Millennium or Millennia objectives, which completely ignored waterways, rivers, and the sea. And I think things are changing. And you mentioned island states, the Asia-Pacific island state nations. Many of them will die in the next 15 years. So it's really horrible to think that, out of 198, whatever, UN member states, 12 or 15 maybe wiped off the map in the next 15 years. It's happening, and thank God, the Seychelles are not among them. But it's an interesting case, the Seychelles, because actually, in many ways, Prince Albert Foundation, King Charles, the World Bank, they came up 7 years ago with the first blue bond. And today blue bonds are becoming more fashionable, so you have more and more issuers of blue bonds. Some of them are companies like Google or big European, American, S&P 100 companies are issuing blue bonds. Governments in Africa and Asia are issuing blue bonds, so it's the next big thing. So 7-8 years ago, green bonds were all the rage. Now blue bonds are becoming more trendy. But when the first blue bond was issued by the Seychelles government 7 or 6 years ago, it was really horrible. So really to get investors' interest, to convince investors to allocate 0.001% of their assets in blue bonds, in emerging market, was lots of work. So from that perspective, things are changing.
Sorry, I'm very enthusiastic about that point. I'll try to be brief. So the blue bond helped restructure the national debt of Seychelles. So that was a crucial point because, yes, investors agreed to restructure the debts, but there were conditions. And the conditions was to develop marine protected areas in the Seychelles, which today 1/3 of the Seychelles is protected efficiently. So there is another power of the investor in that case, lend you the money with conditions, and that's good. One figure to finish my remark, back to the ocean. We know for a fact that if we want to achieve all the ocean conservation requirements, we just need 3% of the annual subsidies given to all fossil fuel. 3% of these subsidies, and yet we're not moving.
Yes.
Okay, I'm going to be a little bit more controversial now because it's always useful when you have a takeaway, something to think about. So I'm going to talk about refugees coming from all over the world to the UK. What has that got to do with pension funds? But if we are investing in those countries which have got the biggest growth, those are still those countries where we are getting refugees from. So refugees are in the papers every day, but they don't talk about why. They just talk about, what is happening. And I'm saying the money that we invest in the global south in particular, where the biggest growth is, where we're going to get the biggest investment return from, are where refugees come. And if those refugees have got a place where they can, and this is part of the S in ESG, the social part. If we are investing in those places, why would anyone leave to come to the UK? So that's something I think you all need to think about.
And it may be cheaper than sending them to Rwanda, right?
Well, Rwanda's only going to cost 150,000 per person, so that's like really cheap. It's not something, and I'm speaking on my own behalf now, I'm not speaking about Westminster Council, it's not something that is going to change the number of people coming here. 150,000 will actually change something massive, and that's like one person. But I don't want to be that controversial. So the other things I'm just going to talk about is, I talked about it at the beginning, and I always talk about something at the beginning and remind people at the end. Our children. I don't just do work in relation to where we invest. I do training for young kids in what they can do to change the world themselves. So they can do some nagging to the parents. They can plant a tree. They can plant a seed. From when I was young at school, we all got seeds to plant, and then we'd bring in the plants in the spring, or we'd plant a bulb and bring it in the summer. We're planting a seed of about what global warming has to them. But they don't understand yet that their parents might have 100,000, 300,000, 500,000, 1 billion in their pension pots. And they can make sure that, I was taught about coal in school and how we dig coal out. I'm going to teach those children, and you can all do it too, about what planting a seed would do. And that seed is about climate change. What planting a tree would do. A grown tree brings 50 kilograms of carbon put back into the ground.
Tony?
Thanks. I talked earlier about the role of pension funds investing in oil and gas and expansion, and also investing in high-risk companies that are causing deforestation. The other side of that, if we want to stop burning fossil fuels, is to invest more in climate solutions. So we worked with Phoenix Group. They're a large asset owner, insurer. They own Standard Life pensions, for instance. And we mapped out the potential of UK pension funds to invest in climate solutions in the UK. And we worked out that UK pension funds could invest £1.2 trillion by 2035 if some key barriers were removed. So, the first and a really key barrier is that the government doesn't have a serious net zero transition plan that covers key sectors in the economy, that's coupled with an investment plan. So again, if investors had sort of policy certainty, they could invest a lot more in climate solutions in the UK. There's a range of other areas, but all of these things are feasible. So our pension funds could invest massively in renewable energy and other climate solutions in the UK. And if we can do it in the UK, we can also do it in emerging markets in the global south. That's more challenging for UK investors. They don't know those markets so well. There's a lot that needs to be done in those markets to build the pipeline of deals that are investable. But again, the World Bank, African Development Bank, Asian Development Bank, lots of organizations, multilateral institutions, are working on ways that public finance can help de-risk private finance to flow into those markets. And those markets are rapidly urbanizing. They need a lot more energy, transport systems. If we can help those countries create those systems in cleaner, greener ways, then that's actually the only way we'll limit global warming below 1.5 degrees. Because if those countries develop on a dirty path, then that's the end of it. So there's a really urgent need for us not just to invest in the UK, but also to invest in those markets if we're going to get the whole globe to limit warming below 1.5 degrees.
Agreed, absolutely, absolutely. And before we pass the microphone to Valerie, just want to say that for that, we need peaceful international relations. So if there is a new Cold War, which sadly is something which is happening, with a new Cold War pitting Washington against Beijing, nothing of that will happen. Because of course, for people to cooperate on the climate finance front, they need not to be hostile. If they're building weapons and missiles, on the agenda, on the international agenda, finance, climate change will fall to the footnote levels. I think it's very dangerous that new Cold War mentality we are being pushed to. Valerie?
Yeah, the point I wanted to say is we talked about the investment strategy in terms of our pension boards, our funds, but we should see everything as a global strategy, which will not only bring in the North, but also the South. But talking about diversity, women play a role in Asia, Africa, and Pacific. Women can make an impact, and pension boards and funds on the social, investing in women who can educate that next generation on climate change and how we mitigate the risk and how we can get women involved. I mean, I go from time to time to Sierra Leone, I've traveled to Guinea. I've seen every village lit up by solar power energy in Guinea. Every village, I was surprised. And women have played a part in Sierra Leone, the barefoot women. They've been trained and they're making solar lights. So there's a lot we can do to bring in. And also, as Chris has said, if we don't mitigate the risk, if we keep safe in the North, the South will come to the North and the problem will hit us in the face. So we need to act, and act now, and act fast. Thank you.
Valerie, bravo. Let's leave the last word to Olivier to wrap up the session.
Thanks. That's a joke, isn't it? No, I would just say that what we can't afford is wasting another decade. So we must act, as you said, now. But to do so, there will be no magic trick. So we have to admit that we will probably fail in our attempts to sort the entire mess that we have left on the planet to address the triple crisis of climate change, biodiversity, and pollution around the world. So we need science to make sure that we don't damage more the planet than we think when deploying the technology. And there will be only a mix of good solutions, not one solution that saves us all. So we need to admit that. It's try, be transparent on the results, try again, and try hard. We don't have really time to waste anymore.
So no magic bullet, but some degree of stoicism. On that note of cautious optimism, join me in thanking our wonderful panel.